The S&P 500 looks to be gearing up for a 7% drop from current levels, so in today's video, I will have all the details on how I'm trading this market next week, including some longer term targets to keep an eye on. So my name is Justin Bennett, full-time trader and founder of Daily Price Action. As always, all of the information in this video is my opinion only and not financial advice. So looking at the S&P 500 here on the 4-hour chart, so far this week here on Friday, we are getting a new breakup structure here to the downside, showing us that sellers remain in control. Now, I'm going to talk about how I'm trading this market next week. However, I also want to show you some longer term targets for this. So be sure to stick around throughout the entire video, because what I'm going to show you makes a ton of sense when you start looking at the chart and really zooming out and looking left. So looking at the S&P 500, all of this started back here with this change of character. You can see sort of a rounded top that we've gotten here from this market. We've discussed this at length in Discord. And so far from this change of character back here and these BOSs that we've had along the way, we have had some nice shorts that have developed. So once you get the new BOS, you're looking for retracements into buy-side imbalances, which I will show you here in a moment. But if you do want to learn how I trade SMC full-time, check out this link right here on the screen. That's going to be a free SMC course that is going to walk you through step-by-step how I trade SMC. And then beyond that, you will have a chance to join us in Discord if you want, and also get access to the full course. So if you don't see that link here on the screen, check out the comment below, the pinned comment below, or the description of this video. So back to the S&P 500 4-hour time frame, new BOS to the downside, showing us that sellers remain in control. However, one important consideration for next week is going to be these lows back here. Okay, so if we go to a daily time frame, you can see that we have these two lows right back here that are just below the current rate. Okay, so this area down here is going to be significant for this market for a couple of reasons. One, obviously support down here, buyers are likely to step in and defend this. And then also the fact that if we go to a weekly time frame, okay, and we look at this on the weekly chart, what you'll notice here is that we do have, so back here we had a break of structure above this high up here. Okay, so we had this high develop, we had the pullback down here into this low. We then had a BOS above here. And so that makes this down here an external low on the weekly time frame. So not only is this going to be key support down here, but it's also a critical factor in terms of the market structure on the weekly time frame. Now, I will show you later in this video what that could result in, okay, as far as the target later this year. But first, let's take a look here at the 4-hour time frame again and talk about how I'm trading this next week. So again, we know we have a BOS to the downside here on Friday. So this right here tells me that next week, I only want to be looking for shorts here, okay? And this has been, again, the case for the last few weeks. Now, in terms of buy-side imbalances, we can see that we have a few of them to consider. So basically from this low back here, all the way down here to this high, this is essentially just one big imbalance here for this market, considering the displacement that we saw back here. Now, a few considerations though. Okay, so targeting areas like this back here, I don't think makes a ton of sense. And that's simply because if you look at the structure here, if you look at this trend over the past few weeks, what we've had is this. Okay, so if we go out here and look at these highs, and I take my parallel channel tool and drag it from these highs up here, okay, and connect it down here at these lows. And by the way, guys, the reason my channel tool looks a little bit different is because I do have it set up in a way that gives me these bands. And I will pop this up here because I know people ask about it all the time. This is just a parallel channel, nothing special about it. If you go into your settings and trading view, set it up like this, then your channel will look like mine. Okay, so what this does here is gives me bands to watch because, you know, at levels like this, especially diagonal levels, guys, I'm not looking for the market to respect these areas exactly. What this comes down to is the fact that we have, if you consider a midpoint through here, okay, so this is your trend, you get the market essentially just distributing to either side of this. Okay, so when we consider channels like this, though, going back here to last month, you know, looking at, again, areas like this back here, this imbalance, all the way back here at the top, doesn't really make a ton of sense because you consider within this channel, okay, and there's no guarantee that we stay within this channel, of course, but looking at this high back here, this area back here, it doesn't really make a ton of sense because of where this comes in with regard to this channel. Because next week, right, if we were to get a move up here, the market would essentially have to snap right back here to stay within this channel. If it were to happen sometime over here, right, then you can see how that doesn't really make a ton of sense, right? Look where this comes in up here versus this area down here. Okay, so the bottom line is the S&P 500 would essentially have to break out of this channel in order to mitigate this imbalance all the way back here. So with that in mind, if we go to a daily time frame, I want to show you something here that could be critical for next week. So this right now is the extreme of a daily fair value gap. So this low right here, now you can see where we did not get a retest on this high. So this leaves a gap up here for next week. And so this is what I'm watching next week, because you can see that we essentially got a very similar situation happening recently here off of this low. So what you'll notice is that from this low right back here, okay, we didn't fully test it, didn't fully mitigate it here, and then we did mitigate it through this area, okay? So it's a similar situation now going into next week where we have this low back here, and so far we have not fully mitigated this area. So I do think that a full retest up here could be really interesting for the S&P 500, but as always too, what this is going to come down to is looking for a lower time frame change of character up here. Okay, so let's say that next week, either we bounce from here, or even if we rally from current levels, it doesn't really matter, because what I'm looking for is for the market to give me a lower time frame change of character up here somewhere to really, confirm that the top is in and that this trend is likely to continue. So it's not a matter of just blindly shorting up here and hoping for the best. It's waiting for that lower time frame confirmation. Now, another consideration too is going to be where premium comes in with regard to this latest leg. So if you'll notice here, what we have is basically from this BOS, we've got this low over here, we've got this break over here, okay? So from these 2 points, we're looking for the highest point here. This is going to be our external high. Now, a couple of ways that you can do this, okay? So ideally, you want to draw your fibs when you're looking for premium and discount OTE. You want to draw them from external high to external low. What that means is from this high up here down here to wherever we bottom out, okay? We don't know that yet because we don't know if this is going to be the bottom or if the market's going to come down here next week first. But ideally, what we want to see is the market move into premium. Now, the other way that you can look at it, because this trend is so compressed here, right? Looking for premium up here seems, in my opinion, a little bit, I won't say far-fetched, but it's not exactly my ideal scenario. So in this case here, I will actually use a lower high. And what you'll notice here is that the 50% essentially lines up with these highs back here. Now, again, we're assuming that the market's going to come down here before bottoming, right? Testing that level, that support level that we just looked at. So if that is the case, then premium is essentially going to be above these highs. And then we have that daily FVG back here as well. Okay, so that could be interesting right there. If we get into premium above these highs, take out this FVG, mitigate that FVG, and then give a low time frame change of character from there, that could be interesting for a continuation of this trend next week. Okay, so hopefully that makes sense. I mean, really nice structure though from the market overall. I mean, I know it looks choppy back here, but really when you map this out, when you put your structure behind it with your change of characters and your BOSs, and then even a channel like this, it all becomes, pretty straightforward, especially when you start looking at the daily time frame and recognize that this back here is a fair value gap, which also aligns with premium on that last BOS. Okay, now let's talk here for a second too about longer term targets, because I want to go back here to the weekly time frame. Because this right here, this external low, what this would mean if we get acceptance below here. Now it's going to take a weekly close below areas like this here, okay? But if we get a weekly close below here, acceptance below, then this becomes a change of character following this BOS, and this could equal, in my opinion, about a 7% drop from current levels. And the reason for that is, first of all, if you look back here, what is the imbalance here that stands out the most? And you can immediately see that there is a candle here. Remember, this is the weekly time frame. This is an entire weekly candle right here that was not mitigated at all. Okay, so this entire area back here is going to be one massive imbalance here for the S&P 500. Again, this is the candle right back here, this weekly candle right here that I'm referring to, where we had essentially no retest into this area before the market just continued its rally. Now, this is also eye-opening because what you'll notice is this high back here, right? These highs back here where we got the drop, the market broke out from this, and then this was our displacement candle. So the eye-opening part to this is if you zoom out and look left. So if we move all the way out here, right? And let's go back here to this price action right here. So what you're going to notice is that we had this high that formed back here. We had this trough, okay, this rounded bottom that formed back here. We had the trough down here, the rally, the market pulled back aggressively. Notice what we tapped, right? We tested this high right back here. So if we draw this out here for a second, all right, so right off of this high right back here, this was the level that was retested exactly. Okay, now the reason this matters for what's happening right now is you'll notice kind of a similar situation, right? The pullback here was different and that this was very aggressive. This was more of kind of a rounded bottom, like I said, but the concept is the same because we came back and we revisited this high back here that we broke out from. And additionally too, there were imbalances back here, right? There were imbalances back here in this area that the market actually came back and mitigated. So very similar situation now where you look at this high, right? All these highs back here, and you can see where this also lines up pretty close to that weekly displacement candle that has not been mitigated. So even though the pullback here was different, right? And the structure is a little bit different, the concept is the exact same. So you can see that back here, we had this high, we had the breakout, we had displacement through here, we came back and retested or mitigated that. Same thing through here. We had the pullback, we had this high form, we had the displacement out of here, and now potentially we're getting the pullback down here into this area to mitigate this. So this would come in, just above the 6K level, okay? So a pretty big drop there if we do get that setup from the S&P 500, considering that from current levels, again, it's about 7% lower from current rates, okay? But the key here, though, is going to be getting that acceptance, that weekly close below these lows back here. If that happens, then again, we're looking for shorts on those buy-side imbalances for this down here being a target, okay? So that's longer term, but again, for next week, I'm watching this 4-hour time frame, this new BOS, this daily FEG up here, which could also align with the top of this channel up here, okay? So this is the region up here I'm watching. Again, what this is going to come down to is a lower time frame change of character, not just blindly shorting up here, but I would love to see whether we bounce from here or down here at that key level next week. I would love to see the market come up here, take out these highs, mitigate this imbalance, give us a retest of the top of this channel, and then potentially look for that continuation. So if this video helped, keep it locked in here, subscribe to the channel. Also check out this link right here on the screen to learn exactly how I trade SMC full time, step by step. So really simple steps, almost 2 hours of content that you will not find here on YouTube. All right, trade well out there. I will talk to you again tomorrow in the weekly SMC Outlook.